You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I get sick of the bear market too. But the last time I had to wait 3 years to get paid. And it was a long time. And in retrospect, I took a ton of risk. But I do remind myself, hey man, you've been here before. And when you did get paid, it changed your life. And that's what I keep on going back to. And I think, honestly, the setup for this market might even be better than back in 2016 when I really did well in the market.
Welcome back to Mining Stock Education. I'm your host, Bill Powers. This is the week of Thanksgiving for us here in America. So a little slower week, but an enjoyable week when we think about what we're thankful for. And my friend today joins me for a conversation, Leni of JuniorStockReview.com. And Brian, when it comes to what we learn investing in mining stocks, I was thinking about what were some of the early lessons that I learned back when I first bought a mining stock in early 2016. And what lesson did I learn that helped me avoid losing money and hopefully making money later on? And I think it was in 2016, I learned what a bull market was, having positions go tenfold in 6 months. But then after I experienced that, I assumed that the price of silver, because I invested in silver miners, would go higher and higher and higher endlessly, even though my wife kept asking me, Bill, are you sure? How about you just sell? You're up so much. Why don't you just sell? And I said, no, honey, I'm going to sell this other investment we have and put it in mining stocks, which I did. And in about 3 or 4 months after August of 2016, after putting more money into mining stocks, I lost 60% of that investment money that I put into mining stocks after having my initial investment go tenfold. So in 1 year, I experienced a bull market. I experienced confusing a bull market with brains. And then I experienced the intense pain of losing a lot of money quickly, all in 1 year, which helped me be more cautious going forward. So I'm thankful for that experience. When you look back over your early investing career in the resource sector, what are some lessons that you're thankful for?
And thanks for having me, Bill.
Yeah.
There's quite a few lessons. Hearing what you just said, that's definitely something that I can say that I had to learn the hard way too. Speculating on metal prices is extremely hard to do. And, even the best commodities traders out there hedge their bets, meaning they're not even fully confident that they know the direction of the metal price over any duration of time. And therefore, how could a retail investor, such as myself or anybody, really think that they're going to have enough information to know where the metal price is headed, especially in short durations of time? And for me, the great example is with zinc. And I had done on my research, and at the time I thought I knew the market fairly well, and I made a couple bets, and it started actually was going very well. And another thing I did was I spread my money out probably too thin, meaning I bought 3 or 4 zinc companies and thought that the zinc price was going to go up and stay at $2 a pound. And it ended up being a big mistake for me. And I think I made money on one of the companies and I actually lost on the other 3. And I think in the end, it probably is a wash. Like I broke even, which I was very lucky to do. And I think the bottom line there is that it reinforced to me what a mentor told me, that speculating in purely metals or buying junior companies purely based off of bullish thesis on metal prices is usually going to lead to losses. And from that point on, I sort of drifted away from that. And that doesn't mean I don't look at the metals markets and try to come up with a view on it. I do. But I know that investing in a junior resource company comes with a plethora of other risks, and including the metal price. And they can lose your money in multiple different ways. And so you need to separate the two, know why you're investing in that resource company based off the fundamentals of that company. One of the other things I think, and it's something I've harped on, I've done a number of presentations over the last 4 months. And again, it's something that I realize more and more with my life is the need for self-awareness, to understand what your knowledge level is, what exactly you're looking for in your investment, whether that's duration or risk level. Unfortunately, I think a lot of investors don't understand risk. You fall in love with an exploration story. It's very sexy. The upside potential can be, blue sky, as they say, and you put your money in, but you don't realize how much risk you're actually taking. And unfortunately, with most of these companies, you're going to end up losing. And, I had to learn it the hard way. I had to lose some money in exploration before I understood this. And again, I think that's unfortunately going to happen with a lot of the market. And so you just have to be cognizant of these small little things. And that self-awareness is broad-based, across the sector and across investor and maybe even life. And if I were, especially a brand new investor in the sector, taking a look at it myself is where I would start with everything and then kind of branch off that. And then you can retool it as you learn.
When I first invested in junior mining stocks, I purely looked at the silver miners as leveraged plays on the underlying commodity. And what you're describing here is that's not how you look at it, is it? You look at, you're buying a company, you're not buying a leveraged play on a commodity's rise.
It is. Well, it is and it isn't. I understand that, there's other ways that the company can lose your money. So it is leverage on the metal price. You're absolutely right. But the other side to it is they can lose you money in other ways. You can have problems with the jurisdiction. As the company is developing that deposit, they can have problems with metallurgy. Now, you can go discover those ounces, but if you can't extract them out of the ground, this is a big problem. And I think, again, that's another one that retail investors don't pay enough attention to is the metallurgical or mineral processing side of things. It's a big part. And, especially you get into some of the polymetallic deposits, and silver's a great example. Silver's found as a component of a lot of VMS deposits, which are polymetallic. And if they can't, or if the extraction portion of the silver is quite low and the lead and the zinc is much higher, then really what you've bought is a lead zinc deposit, and you've got leverage to the lead and zinc price and not so much silver.
In silver equivalent ounces, though, Brian, silver equivalent ounces.
Well, and the equivalent ounces is like, again, these are great, like first level thinking type of numbers or factors. But really what you have to dig in and get to those second level or third level factors to really look at what you're buying. And of course, the company's going to market it, from their resource, and the resource, most of the resources you're going to see in there don't include recoveries. And so they might have 100 million ounces of silver, but if they can only recover 50% of it, which could be fairly realistic for a VMS deposit, then maybe it isn't as sexy as you may think, or maybe it doesn't have the leverage that you think it has as silver. So again, these are things you just have to look at, and there's nothing wrong with buying a leveraged zinc or lead play. In the right market, if you get a good deposit, these things can make sense. But you may not be buying what you think you're buying. And that's more of the point that I would want to make, is that, there is some more thinking you have to do besides just glossing over the resource table. So
all ounces in the ground are not created equal, right?
And no, absolutely not. And that's, you get to these generic, again, it gets into the marketing, but you get these generic factors that are listed like EV per ounce. So two things there, EV is enterprise value, and this is the market cap minus the cash. Junior companies that don't have inflows of cash, I find EV a very puzzling thing to look at. Because they're burning that cash. And so it's just a duration of time before that EV means absolutely nothing. So, companies can have large cash positions, and of course their market cap or their EV looks appealing. But if these guys are doing their work, that EV is going to be changing every month, every quarter. And so it just degrades. So again, EV per ounce doesn't really make any sense. And then the other side to it is those ounces in the ground, like you said, metallurgy and mineral processing, if those ounces aren't recoverable, or maybe some of those ounces have a high cash cost in removing them. And so you need higher metal prices to account for that. So you can have first quartile ounces, like 100 million ounces in first quartile, which probably has a possibility of being built or acquired this cycle. Whereas those marginal deposits, may have an appeal because they're marginal. And, the whole marketing side on that is that, they're going to have more leverage on the price because $100 price and movement in the gold price means that much more to a marginal deposit than it does to a very good first quartile deposit. Okay. But again, the odds of these being bought or anything real happening to them is just not there. The other side to it is jurisdictional risk. So does 1 million ounces in El Salvador mean the same thing to you as 1 million ounces in Nevada? Well, to me, it doesn't, but maybe to you it does. So again, these are things that questions you need to ask and look at before just looking at the generics or the first level thinking on some of these tables. And the ounces in the ground are more marketing based than they are analyst based.
Brian, everything you brought up there is so great. And that's good segue for an email I received yesterday. Every week I get about probably 2 to 8 emails requesting an interview for the show. And yesterday I got an email from a company that offered to pay me in uranium to do the interview. So normally I don't even pay attention to the emails, but this one I'm like, pay me in uranium via an NFT that's backed by physical uranium. So I'm like, what is this thing? So I looked more into it. And it's an NFT, non-fungible token. So they're tokenizing or creating an electronic ownership of uranium in the ground. So then I looked more into it, and they're tokenizing uranium in a country across the ocean, across the Atlantic from where I am, with no feasibility study, no permit to extract it, no known economics, none of this. And they're just selling it as 1 token equals 1 pound in the ground. Now, with everything you just said, you understand that there could be next to zero value for the uranium in the ground, but then they're going to mass market this and say, look, if you buy this token, you're getting uranium in the ground, you're getting exposure to the uranium bull market. Your thoughts here?
Run. That's exceptionally scary. And I think it should pose a lot of questions to investors that hear that type of pitch. Just for all those reasons we kind of discussed in your line of questioning. There's a lot of things that come up, and to me it would be, I don't want to hear anymore. This is crazy. But I think for these guys, I would hope that they have more trouble raising money or finding buyers, considering all the stuff that's happened in the crypto market and over the last FTX and the losses that some investors have encountered. Hopefully that the sale is much harder, just based on those losses that people have had associated with these semi-tech companies. For the resource investors, again, these are something that you may not recognize when you first hear it, but again, you start asking yourself, well, what's the confidence level in these ounces in the ground? How much can actually be extracted? It might be a 9 million pound deposit of uranium, but how much of it can you actually extract if you were to extract it? It's probably not 9 million pounds. I don't think I've ever heard of 100% extraction. And so, if they're giving you $1 per pound in the ground, there's some people where, that pound doesn't really even exist. The other side to it is the confidence level. Now, uranium's a little bit different. Like, these aren't like a gold vein deposit where the difference between an inferred resource and a proven and probable resource is huge. But it still does make a difference. So the difference between an inferred and a measured and indicated is something that you would put more confidence or value in. And you'd want to ask the company, like, where is the 43,101 on these ounces or pounds in the ground? So many questions, but I think bottom line, this is something that investors want to run to the hills for. And, it pushes, I look at the trusts that are out there and the other ways that you can buy physical metals. One of my things that I've said, if you're bullish on the metal, buy the metal. And the trusts are seemingly probably the safest way that you can do that through the stock market.
The physical trusts.
Right. Yeah. The physical trusts. And I think, the broker of those trusts is also, they've got a lot to lose. And, the one that comes to mind is Sprott. To me, they're a trusted name, and I've bought the Sprott trusts, and they've got a lot to lose by doing anything shady. And because I would have confidence in that name and who they are, that brings a lot more confidence in buying that product. Whereas this other NFT, who are these guys, come out of nowhere to form this trust. So yeah, there are a lot of question marks, and I hope investors are more discerning when it comes to looking at pitches like this.
I have to read you this from their description of it. They said, when you own this NFT, you as the owner are entitled to the exclusive rights of owning that physical asset, which in this case is uranium, including the right to sell, trade, or redeem. And then it goes on, how do I redeem my uranium? By regulation, the general public is allowed to order these materials without possessing a radioactive materials license. However, taking physical redemption of uranium is not allowed without possessing a radioactive materials license. So to redeem
so order it.
Yeah. And all I have to do to redeem my NFT here is just fly across the Atlantic with some shovels and picks and, go out into the middle of nowhere and start digging up my uranium. That's all I have to do to redeem it here. Sounds great, huh?
It's crazy. That is absolutely crazy.
So if you're not investing in, one more question, Brian, before we leave this topic. Do you think that there's any legitimacy to using blockchain to forward sell a future mined commodity as a means of financing an extractive company? Is there any legitimacy to this model, even as we're kind of poking fun at it here? Could it morph into something reputable?
I think so. I like when I first read it, I didn't think it was, the concept is crazy. But like I said, it comes more to the reputability of the deposit and the person that's extracting it or kind of running the business. I think that the right companies started to do something like that, you could probably, it'd be an interesting way to fundraise or finance a company through that mode. It's sort of like a public stream almost, if you think about it. And so I think in the future that maybe there is something there. But again, it comes with a lot of question marks, and it comes with a lot of things that need to be in place to be investable from my point of view. But it's an interesting concept, and it's probably where part of the market is at least headed. Like, stuff is digitizing, and they're looking for other sources of cash from the regular banks and institutions and stuff like that. So maybe there is an avenue here. It's definitely not what this company is showing, but yeah, maybe there is something there, in the future.
And from the investor standpoint, I think this is why we're having this conversation. For those that don't understand mining, you're not just buying a commodity futures contract. You're basically giving your money in exchange for a ton of risk and a ton of unknowns. And that's the key point that I want to communicate through this discussion. Brian, where are you putting your money if you're not putting it in Uranium NFT? You don't have to give a name, but just maybe kind of a profile of where you're finding value in the sector.
Sure. Well, it comes actually at a good time because 2021 was a tough year for the entire market, and then going into 2022. One of the things that I noticed is that besides new discoveries, the market really wasn't giving any recognition to almost anything else. Most of the news that would come out from, let's say, a developer or maybe a producer to a certain extent, was treated as a liquidity event, meaning people took it an opportunity as to take cash off the table. And that, it makes sense to a certain extent. The market was kind of falling apart and people are scared, and this is sort of the natural thing. And so really over the last 10 months, I had no new picks in the newsletter. I was really just playing around with adding and subtracting from positions I already had. But recently, I added 2 positions to the portfolio, and they were for specific reasons. For one of the companies, I went back to a company that I invested in 2020 and made quite a bit of money off of. And to me, this company has only gotten better over the last year and a half. We actually sold them last summer, and they've only gotten better. And, they got their initial permitting, and they've got their feasibility study in place. And, they're right in that sweet spot of financing and construction, and they have to get the final environmental permit. I know the management team exceptionally well. I toured their properties. And so when their share price went down to a point where I thought it was ridiculously cheap, that prompted me to buy it. And I'm not as concerned about tax loss selling, just because this latest selling spree that I bought on this 10% drop in their share price, I think that is the bulk of the selling that we're going to see. And so I bought it. Second, the second company that I bought, and it was actually just yesterday, this company has got what I would consider an X factor. So, there's a lot of companies that I follow in my watch list, and they're value based, right? Like, I see value in the company, they're selling for a discount to their underlying value. But this X factor is a reason why I think the share price is going to go up, most likely in the short term, that separates it from other companies, and it's linked to a new discovery. And I won't go into total detail, but to me, it's that X factor that prompted me to buy it. If they didn't have that X factor and they were kind of lumped in the same pie as a number of other companies, I probably would still be just sitting on the cash. But some drill results came out, and I said, you know what? That is something that could prompt that share price to move despite of everything else in the market. And best of all, it's based off with an underlying value proposition that says, hey, you know what? Even if the expiration doesn't go where I think it's headed, I still have value there. And I don't think the downside risk is that much. Like, I think the market is going to value the company for what it's currently selling at. And so that prompted me to buy that. So for me, I'm looking at companies that are extremely discounted or companies that are discounted with that sort of X factor, something that separates it from those other developers or producers, that has the potential to capture that market's attention and have that value recognized, hopefully in the shorter term. But these things all come with risk. And we'll see how this last part of the year goes in terms of tax loss selling, whether, what we saw in August and over the last couple of months, whether that's the bulk of the selling or if we're still in for a fun first 2 weeks of December, we'll see.
For what it's worth, I've had a couple of conversations in the last week with people in close contact with smart money, including people who manage hundreds of millions of dollars. And what I was told is that they are expecting a full pivot. 6 to 9 months, basically, is when they expect a full pivot by the Fed, which then we expect will send gold higher, right? If they turn dovish, we expect gold to go higher if inflation still needs to be dealt with, but we'll see.
Well, you know what, Bill? It's quite interesting. So I've attended a number of conferences over the last, since PDAC, really. I did Metals Investors Forum at PDAC, did another Metals Investors Forum. There's another smaller conference I attended in Red Cloud a couple of weeks ago. The amount of people that have sort of capitulated on the gold or the precious metals market, it kind of brought a smile to my face. And, to me, I guess, I don't know, it's just maybe the way that I think. To me, it's so clear why precious metals are important in a portfolio and why they're so important to the world, because they are the only real money. And to hear people, giving up, and a couple of guys came right up to me, and one was definitely a reader, but they said, "Hey, you know what? Gold's done, man. You should walk away. Copper's the new thing." And I'm not saying anything bad about copper. I like copper too. But to me, that really said, hey, you know what? This actually might be the bottom. Even a friend who I was talking sort of negatively or questioning the thesis in gold. And I thought, hey, that really is maybe a sign that we've reached that bottom in the precious metals market, and definitely fed into why I was more apt to deploy some of that cash I had left, because if we're not at the bottom, we got to be pretty near. And just considering everything that's going on in the world, I think precious metals, have a bright future. And that's just a few comments on the gold in particular.
Brian, I admit to going days without looking at the gold price at times because I'm not a trader. Especially in a bear market, that's just one of the ways you just don't think about it. And I talked to some other experienced people too, and they're like, yeah, I just go outside and work. And I said, that's what I did. I said, I bought a tractor. I just go outside and work, cut a log down, move a tree or whatever. And you just don't think about it every day. I don't know how some of these traders can watch the gold price for 18 months and just get frustrated with it. I just put it aside,
But don't forget though, it's a different mentality, right? And so you know yourself and how you invest. And it doesn't surprise me because I'm sort of the same way, that I don't get how people do it either. But consider this, so do flip your mentality into their position. They can make money when it's going up and making down if you're a trader, right? And your duration of holding it for some people is a day or even shorter. And I think if you change your outlook and kind of take their side of things, I think you can see it easier. But what the problem becomes, I think for most people, you can't hold the duality in your head, and most people can't be a trader and be a long-term investor, right? And this is the problem. I think a lot of retail investors will listen to us or listen to a podcast, and they're like, hey, that sounds like a good investment. The only problem is it doesn't align with how they actually operate. And this is a big problem because whether it's risk or duration of investment or a number of different factors, if it doesn't fit you, it's probably going to end up in a loss because one, you probably didn't know anything about the company. Second, it took too long or it was too quick of a trade, And so if it doesn't fit you, then there's no way there's very little probability that it's going to work out. So I think you have to be really cognizant of how you're investing, who you're listening to, and how it fits into how you see the market and operate. And if you can align all those things, and it's not always going to work out, but if you do that, I guarantee you'll be more successful.
Great point. And no denigration to you traders out there. Nothing ill intended whatsoever. But it's just that when you think gold should be going up incessantly, and it never does for 2 years, it becomes frustrated. And I've seen that wear on people.
I hear you. No, I hear it. Well, it does. I get sick of the bear market too. But the last time I had to wait 3 years to get paid. And it was a long time. And in retrospect, I took a ton of risk. But I do remind myself, hey man, like you've been here before. And when you did get paid, it changed your life. And that's what I keep on going back to. And I think, honestly, the setup for this market might even be better than back in 2016 when I really did well in the market, just considering what's going on in the world and unfortunately where the gold price might have to go to sort of level things off. So, who knows when it's going to happen, but I think we're getting closer to that turn. So,
and for those that don't know Brian's story, what he just referenced, he sold his house, took the equity, tripled his money in junior mining stocks, and was able to quit his job as an engineer. And he's been a full-time junior mining speculator ever since. Brian, did I get that right?
You did. Yeah.
And
that was 2013 to 2016. And all I did was see the portfolio go down. And it's especially at that point in my life, like it wasn't the best feeling at all. But I did stick it out, and it ended up being very good for me. And like I said, I think this opportunity now is probably better than that. And I'm not going to say I'm going to triple my portfolio because that would be huge. And I don't know what that actually means. if the gold price goes up that much, the rest of life might be kind of hairy. And so I kind of hope we don't see too high of a gold price, but well over $2,000, like 2,200 would be fantastic. So
well said. And Brian writes a letter. You can find more about that at juniorstockreview.com. Brian, always appreciate your insights. I've learned a lot from you over the years. So thank you for joining me on today's show.
Thanks for having me, Bill.